Hello guys, and welcome to another developer video. Today taking a look at Broadcom. It is an American multinational designer, developer, manufacturer, and global supplier of a wide range of semiconductor and infrastructure software products. First, we start with the valuation. The free cash flow yield is 2.49%, so this is just a pretty overvalued company. The price to earnings is 91.74, which is a lot. Now going to the business metrics, they look okay, I guess. Their ROE is 8.71%. Their return on invested capital is 5.57%, which is pretty low. Their return on tangible assets is 22%, and their current ratio is 1.17. So they have very good short-term equity. Now going to Grant's valuation, we use the 2025 estimated earnings per share of $6.59 with a 20% projected growth rate and the current yield on AAA corporate bonds, we get an intrinsic value of $141. Next, of course, going to the discounted cash flow model, using a 20% growth rate for 9 years, a 2% perpetual, and an 8% discount rate, we get an intrinsic value of $209.3. Of course, we have to look at the historical multiple. We can see that they've had an average price to earnings of 30, and now they have a price to earnings of 116, so that's a lot. Going to multiples valuation now, I've compared them to NVIDIA, Texas Instruments, Micron, and Analog Devices, and we've got a stock price of $53.75. And also, lastly, we have the dividend discount model applying a 7.25% growth rate with an 8% discount rate. We get an intrinsic value of $319. Now we go to the output, which is the average of all of these four, and the intrinsic value is $181. Of course, we have to apply a 15% margin of safety when we get the buy price of $153.86. Now, to be honest, 20% growth rate is absurd. I mean, look, they have a 20 billion free cash flow now, and they're expected to reach a 100 billion free cash flow by 2032. That is a lot. So 20% growth rate is no joke. It means 5x in 9 years. And I'm not sure if they can actually achieve this. Now, maybe they can, but realistically speaking, I don't think they can achieve a 20% growth rate, and this is a lot anyway. So the price per share of $209, even this is probably overvalued. I suspect something closer to 13 or 14%, so about $130 per share. But going to the moon, so to say, deserves a 20% growth rate. So if they have such a high valuation, they must have a 20% or higher growth rate to actually achieve a fair value in a decade from now, supposing that the stock price stays the same. Now, I believe that the company is extremely overvalued. We can see here that they do not have that exceptional of a business metrics. So Nvidia has a much lower valuation and they have much better business metrics. So this company is a joke compared to Nvidia, to be honest. They're way too overvalued. They do not have good business metrics. And also they're trading above the historical average and also the industry average in terms of price planning. So from any point you see this company, they are not worth your money. But of course, I'm not a financial advisor. Please do not take my opinion as investing advice. And also, do your due diligence. I just cannot stress this enough. It is very important that you do your own due diligence. If you believe that this company is a buy through thorough analysis, then yes, you can buy it. But for me, this is not a buy. And I believe I've concluded the video. There's been everything I've talked about. To add to everything I've already said, I think the stock is maybe a buy at 100, 120, $130. But for now, I think they're a sell. They're not a hold, they're a sell, in my personal opinion. Before ending the video, I'd like to talk a bit about our affiliate, ticker data. Ticker data is the tool that I've used for this video. So you see here, you put in a ticker symbol, all of the data loads up. This is ticker data. You'll see here in real time the financial data appearing. You see all this has just appeared. This is a very good tool. especially for savvy investors, and it's also pretty cheap, and I suggest you check it out from the link in the description below. Also, do not forget to check out my investing blog where I feature in-depth analysis on a diverse set of investing topics. And I hope to see you in the next video, guys. Have a great day. Bye.